Let's talk about what's going on with Sam Bankman-Fried. In just the past 5 years, Sam Bankman-Fried went from buying his first Bitcoin to becoming a multi-billionaire. The FTX founder is now worth an estimated $11 billion. He could have bought that Jordan jersey if he wanted to. His exchange is now worth $32 billion, and it brought in about $1 billion in revenue just last year. CNBC's Kate Rooney has more on the CEO's rise to the top of the crypto industry. They call him the JP Morgan of crypto, right?
Yeah, the Michael Jordan of crypto, if you will.
Now, how are Sam and Gary connected? Sam's co-CEO, Caroline Ellison's father, was a professor and head of economics at MIT. He was also the department head. According to this article, Glenn Ellison is Gregory K. Palm Professor of Economics at MIT. He formerly served as the economic department head at MIT and as the editor of Ed Econometra and co-editor of the Rand Journal of Economics. His two primary specialties are game theory and industrial organization. In game theory, he is best known for his work examining how the development of social norms in games is affected by the structure of social networks. So Sam's co-CEO, who was his girlfriend, her dad was head of economics at MIT. And guess who also worked at MIT in the same department? According to news.mit.edu, at MIT, Gensler has been professor of the practice of global economics and management at MIT. Sloan, co-director of MIT's FinTech S-Scale program and senior advisor to MIT Media Lab Digital Currency Initiative. He taught classes about blockchain, digital currencies, and other financial technologies, and won the MIT Celan Outstanding Teacher Award for his 2018-2019 academic year. Gensler first joined the institute in 2018. So let's break this down really quick. According to this article by CoinDesk titled Bankman-Fried's Cabal of Roommates in the Bahamas ran his crypto empire and they dated. So I'm not really sure who was dating who, but from the sounds of it, they all dated each other. So we have Sam Bankman-Fried, we have Caroline Ellison, his girlfriend, side girl, partner, college crush, whatever you want to call it. They both attended MIT together. Then we have Caroline's dad, Glenn Ellison, who was the head of economics at MIT. Then we have Gary Gensler, who won a Teacher of the Year award at MIT when Glenn Ellison was the head of economics. Then we have Sam's mom, Barbara Fried, who funded Mind the Gap, a huge political donor to the Biden campaign. Words can't even really explain what I'm thinking right now. Now here's one that really blew my mind. Check this out. According to this article by Intelligencer on nymag.com, on election night, more than 100 million in bets on the outcome were placed via FTX's prediction market. Bankman-Fried was as nervous as most Biden voters. Going into the evening, he thought Trump had a 30% chance of winning. After Miami-Dade County unexpectedly swung for Trump, he went to 50-50, intellectually and emotionally. I was 99% sure Trump was going to win, placing bets on FTX, both for and against Trump at various points. He netted a non-trivial profit.
We only had a few days to make some of these decisions. What we basically came to believe was the following. The first was that, if possible, it would be extremely valuable to the ecosystem to backstop some of these places. First of all, it's just backstopping customers and making sure they're protected. But second of all, stopping contagion from spreading through the ecosystem, right? Stopping it from being the case that anyone who transitively did business with any chain of people who did business with one of the troubled assets themselves became troubled. And then the secondary goal was maybe there are good trades to do. Maybe there's an investment or acquisition that can be done at, terms that we'd be excited about, given the sort of need for capital right now. But that was usually not the standard we were able to hold ourselves to. In practice, the standard was, do we feel okay about this from a financial perspective? Like, does this look at least mediocre? Like not a huge loss in expectation, maybe a gain in expectation, hopefully, maybe not, was sort of the bar that something had to cross in order for us to feel comfortable, intervening there. And often we just weren't sure. Like, you look at a lot of these cases, they had 4 days before they're going to file bankruptcy. And so we had 4 days to do all of the diligence we could on the company, learn everything about it, understand the industry, their business, their customers, understand how we thought things were going to unfold, and then make a judgment call and wire money. I think the Voyager case is sort of an interesting one there. What we ended up doing was extending a sort of two-piece line of credit. And the first was $70 million. And that $70 million was money they could just draw on immediately, no strings attached. And we knew we might lose that. Then there's a larger line of credit, which would eventually have potentially plugged our best guess at the time as to what the complete hole was, but which had conditions on it. If there's just an immediate run on the bank here and the business is just going belly up and there's nothing we can do to actually save this, like we don't want to just keep going through it. We very well may lose that 70 million. I don't know if we're seeing it again. And so be it. Like we understood that risk going in.
Do you still have enough cash if you needed to do another bailout?
Yeah, we did, and we try to keep that on hand. Like we try not to empty the coffer, so to speak. We had a couple billion going into this, and it lines up roughly with the amount that we'd raised, over the last year, and on top of that, we had been profitable.
So billion-ish to deploy.
Yeah, and again, you get to definitional issues here of how much do we really feel comfortable deploying? Saying that there's another ballpark billion, that is sort of completely unencumbered, certainly will get you within a factor of two, certainly, if the right answer.
You said FTX has a responsibility to seriously consider stepping into the time to save companies. Why did you have that sense of responsibility?
It's not going to be good for anyone long term if we have real pain, if we have real blowouts, and it's not fair to customers, and it's not going to be good for regulation. It's not going to be good for anything, and so. From a longer-term perspective, it's just that was what was important for the ecosystem. Is what was important for customers, and it was what was important for people to be able to operate in the ecosystem without being terrified that unknown unknowns were going to blow them up somehow.
I would recommend to the family members and Sam himself get to a regulator and disclose everything. And that's your moral imperative. Right. If you're a believer in quote-unquote effective altruism, you've done damage to this industry, you've done damage to the people in this industry, and the account holders that trusted you, so enough is enough. Don't let a charade go on. Speak candidly, directly, and honestly so that we can clean this up immediately.
If you could speak to the state of mind of Sam when you saw him. What were the conversations you had with him and his team? And it's probably worth noting that much of that compliance and legal team appears to have resigned over what's taken place.
Well, Sam was certainly contrite. I think he had a group of people on his team that I would break up into two different categories. A group that actually was in his inner circle that may have known every single inner working, and I think there was another group of people that were perhaps outside the inner circle that had a level of shock on their faces in terms of what they saw. And then, of course, you're right, some of the legal people that I had met with resigned the subsequent day, that Wednesday. I was there on Tuesday, Andrew.
But when you spoke with Sam, did you say what happened or what's happened? Did he explain what was happening?
I did. He was under a lot of stress, and so I showed up in a rescue finance situation, and then it became clear that there were problems. He did address the firm over a firm-wide Zoom. I had the opportunity to hear that, where he was contrite, and he was trying to explain that they were going to fix whatever the problems were that they did and whatever the miscalculations that they had, et cetera. He was spending a lot of time with the legal teams. I certainly didn't want to be there to bother anybody. I was there to help. But you could see there was a dissembling going on among staff, which was causing a lot of distress.
Did you confront him? I mean, did you say, look, man, it seems like...
Not my personality to do that, particularly when people are in a situation like that. I did not confront him. Again, I was there to come to help him, but it became clear that there was really not much I could do, and so I booked a flight back home.
Obviously, one of frustration. There's no question about it. I'm still a huge advocate for the potential of blockchain and cryptocurrencies. I'm disappointed, like many other shareholders. It sets, in a way, though, I always try and find what is the outcome of something like this? I mean, yes, I'm a shareholder in the International. That's a zero. It's not the first time I've made a bad investment, probably not the last time, but luckily I make more good ones than bad ones, and I learn from my mistakes. What's going to happen now is there won't be another situation like this for institutional investors ever again. We're simply not going to put capital to work until this stuff gets regulated. And what is occurring, and I'm just one voice in it, what I'm going to be doing is I'm going to fly to Washington, and I want regulation. I want it now. No more delaying. I think this puts tremendous pressure on the SEC. I think a bill like the Stablecoin Transparency Act, which has been floating around forever, not going to signature, not going to markup, we got to stop doing this to ourselves. As an industry, it has to stop, but also it's time to move forward with regulation. And if this is the bottom of the crypto market. A massive player goes to zero, and now you build from the ashes. That's the upside. I am still going to invest in crypto. I lost money in the accounts there. They have a gate on them now. It doesn't stop me from buying more, and I'm going to do just that. I'm going to take advantage of the fact that most of these currencies and tokens and coins have absolutely been beaten into the ground as a result of this, and probably a buying opportunity. That's the way I look at it. I mean, look, I'm going to agree. It was a terrible investment, 100%, and I lost my money. I get it. I'm a diversified investor. I make mistakes. This is one of them. But I learn from my mistakes. This won't be happening again. If I'm going to put serious capital to work in a broker-dealer, in an exchange, it's going to be one that's regulated, that has transparency, and has the same rules of test that every other exchange that deals in stocks and bonds has. Because, you know, everybody's saying the same thing. It's great to be a retail investor and trade a few $1,000s worth of crypto. And if that's what Binance is going to do, good for them. But every single institutional investor is going to look at this and say, okay, can't play with this structure anymore because there's not enough transparency. I'm going to wait for the SEC or whoever it is going to be, the Fed or whoever, to regulate this stuff. This is actually a turning point for this industry. It's a maturation for this industry. That's what's going to happen. I don't think we can solve for every single asset in crypto. I want to do one thing, and that one thing is to pass the Stablecoin Transparency Act. One thing, because that allows us to use the US dollar as a payment system. I would use that in all of my businesses every day. It's far superior to ACH, far superior to SWIFT, far faster, more transparent, 100% audible. All I need is the regulation that forces an audit every 30 days and guarantees me the backup for this is Treasury bills less than 12 months of duration. That's one thing. Very simple. That would signal to everybody around the world that the regulators here in the United States are taking crypto on, starting to put rules in place, putting the guardrails on. No one is going to play ball anymore in this space on an institutional level with serious capital till we get it done.
Series of cryptic tweets spelled out the words "what happened" over the past 24 hours on Sam Bankman-Fried's account, sparking hot debate and even anger on the platform, obviously. Ana Herrera, Bloomberg senior crypto editor, joins us now for more. So, Ana, this is so weird. I saw these tweets pop up on my feed, and just strange behavior for someone who seems to have lost money for so many people.
Yeah, I mean, crypto is still a bit of a weird sector, let's say, in finance. So it is surprising, but not too surprising. Obviously, I don't have the answers as to what he means, if he means he's going to give us more information or not. Certainly, people weren't very happy because it seemed a bit jokey, and people were pointing out, you know, it might seem like a joke to you, but people are losing money. This isn't a great look for the industry, and some of us are trying to maybe build real things. So we don't know what he meant, but we know he made people very angry.
Well, and Anna, we know he's left a certain void in terms of leadership for the crypto industry, one that now CZ of Binance seems pretty determined to step into, become crypto's new savior, talking about a recovery fund. But what is the risk around that kind of power concentration?
Yeah, obviously, we saw already with SBF, he wasn't just like the CEO of FTX, he was becoming a white knight in the crypto winter, rescuing other firms. So people are wondering whether we might have the same issue if CZ becomes a white knight. If something happens to Binance, who rescues Binance, right? So, he's been a savior, but also in a way he precipitated what happened because everything unfolded in his tweets. So it's definitely one to watch and see what happens there, who takes SBF's place.